All right, before we jump in, let's get this standard disclaimer out of the way. This is all for educational purposes, and it is absolutely not financial advice. You've always got to do your own research. Okay, let's get to it. Today we're breaking down the January 9th health report for the DexFi fund. The big headline here is that we've seen a bit of a pullback, which honestly was expected after the incredible run we just had. The fund's now sitting around $1.85 million.
Now, this is probably the number that caught your eye, right? A drop of over $100,000 from the peak. And look, I get it. Seeing a number like that in red can feel a little jarring.
To put that into perspective, it's a 5.3% dip for the all-time high we hit just a few days ago on January 6th. So the big question is, should we be worried? Well, as you're about to see, context is everything. And this right here is where that context really starts to click. Just look at the size of that gain since Christmas, nearly $300,000. Now compare it to the pullback. That little drop, it's really just giving back about a third of the gains we've packed on in just the last couple of weeks. And this is the most crucial part of the story. A 5% correction isn't just happening out of the blue. It's coming right on the heels of a massive 25% surge in less than 2 weeks, a run that gave us 4 all-time highs in a row. After a move that goes almost straight up, a little consolidation like this isn't just normal, it's actually really helpful. It helps build a much stronger foundation for whatever comes next. So let's do exactly that. Let's zoom out and take a look at the bigger picture, because that's where you see what's really going on with the fund's performance. This timeline lays out the whole journey over the last month. We started around 1.6 million, hit that low on Christmas Day, and then, boom, we went on that explosive run to almost 1.96 million. So today, sitting here at 1.85 million, you can see we're still way, way higher than where we were for most of this entire period. And here's the math that really drives it home. We are still up over 18% from that Christmas low. We're up over 14% from where we were a month ago. That 5.3% drop from the absolute peak, it's just one chapter in a much larger and a much more positive story. Let this one sink in for a second. Even with this pullback, the fund's value right now is higher than it has ever been at any point in its entire history before January 3rd. We've basically established a whole new higher floor. But okay, what about sentiment? What are people actually doing? Well, this next part shows there's some real conviction in the fund's health even while the price is down a bit. Get this, over the last 3 days, while the price was pulling back from that all-time high, 202 new bonds were minted. That is a really powerful signal. And here's why that's such a key insight. When people are buying during a massive pump, they might just be chasing the hype. But when they are minting new bonds during a dip, that shows real conviction. It means they're buying because they believe in the long-term fundamentals of the whole protocol. And at the same time, the protocol itself has been getting more efficient. The capital deployment rate has actually improved, rising up to over 92% since we hit that peak. So what does that actually mean? It means the protocol isn't just hoarding cash. The amount of idle cash in the wallet is shrinking because that capital is being put to work. This is exactly what you want to see. It's a super bullish sign of active strategic management, especially during a market cooldown. So let's talk about the why. What actually caused this cooling off period? It really boils down to a couple of key things, one external and one internal. First, the external factor. The price of Ether, which is the bedrock of this whole ecosystem, pulled back about 4.7% from its recent high. Our fund, meanwhile, moved down 5.3%. This close correlation is totally expected. It just shows that our movement is pretty much in lockstep with the broader market. Now let's look at the internal picture. Here's a peek at today's trading volume, which was about 6.1 million. See that tiny little 3% slice for a token called EDEL? Well, believe it or not, that little slice is a huge part of today's story. Just a few days ago, at the peak of our run, EDEL's volume was absolutely on fire. It has since cooled off dramatically, dropping by a staggering 84%. The cooldown of just this one previously super hot asset explains a pretty big piece of the fund's overall pullback. We're calling this the EDEL vault normalization. The vault just gave back some of those incredible gains, which is a totally natural rebalancing event. And honestly, this actually improves the fund's overall health by bringing its concentration in a single asset down from a high of 11.6% to a much more balanced 10.7%. Okay, so putting all these pieces together, it's time to give our final verdict on all this recent action in the market. This is the question that's probably on your mind, right? After seeing those red numbers, are we looking at the start of a crash?
The answer is a clear no. Our verdict is simple. This is a healthy correction. It's a necessary, totally normal phase of consolidation that tends to shake out the short-term speculators and lets the fund build a stronger, more stable base. And here's the final summary of the protocol status. The positives are really strong. We're still way up from Christmas, people are still minting new bonds, capital deployment is getting better, and the APR has recovered. The cautionary notes, the dip from the high, the lower volume, that EDEL normalization, those are all expected parts of this phase. The engine is still running smoothly, just at a more sustainable speed. So the final thought here is this. Perspective is everything. 2 weeks ago, we were at a low of 1.565 million. Today, we're at 1.855 million. Yeah, we pulled back from the absolute peak, but we are still up nearly $300,000 from that low point. This is consolidation, not capitulation. The real test now is to see if this new level holds and becomes that solid foundation for the next leg up.
So that's our breakdown for today, and as always, we'll finish with the full disclosure. Please remember, this analysis is just for educational purposes. It is not financial advice. Never, ever invest more than you can afford to lose, and always do your own deep dive before making any financial decisions. Thanks for tuning in.